Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground. with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, two, 1, 2. Good afternoon, traders. How you doing? Yeah, it's became very, very cold. All right. Let's get some music. Ah, no, I can't do that. Copyrights. Du hast, or du hast. What was the... Good morning, good afternoon. Outdoor cooking. Oh no, God, that's too gay. There we go. Right, ladies and gentlemen, welcome back. Quick check. Can you hear me? Can you see me?
Yes.
Yes.
Okay.
What's up?
Someone's saying it's full margin sell day. Well, let's talk about it. Let me just grab some water. Oops. Oh, Jack is just asking to put him back on Discord. Okay, Jack, check your email. I'm sending you a link so you can rejoin our members Discord. Let me just find a link. Jack, if you're listening, the link is on its way. Welcome back, brother. Okay, today we have jobless claims. It's a very special day because tomorrow is going to be a bank holiday in the US, meaning that they pushed the jobless claims and the other important data a day earlier. So it's really unusual that we have jobless claims on Wednesday because this is a weekly data which are released on Thursday every single week. And also we had yesterday the FOMC meeting minutes. How many of you have read the meeting minutes?
I did.
Did you enjoy it?
I did read this. I did read the summary.
Mm-hmm. That's good. That's good. That's good. Obviously, the FOMC meeting minutes document is quite heavy. It's not for the everyday person. It can be intimidating. Even some of the parts, you know, it's highly technical. The seasoned traders get shy or intimidated by it. But what I would recommend is to read the this part, which is highly informative and everyone can understand. This is the staff review of the economic situation. It talks about the health of the US economy. It talks about labor market, job market, price inflation, producer and consumer, and also the supply and demand of labor, whether it's a shortage or surplus. It gives you a very good overview of the US economy, and from this perspective we can start building up the macroeconomic strategy. Because if you trade, I mean, it doesn't really matter what kind of assets you trade, because everything is interconnected with the US dollar or the US economy. But especially if you trade gold, indices, US dollar, Japanese yen, or any kind of currency pair with US dollar, you must understand the health of the US economy. This is inevitable. If you think that you are a professional trader, or you want to take it seriously, or you think you take it seriously, this is a must. Seriously, you have to read it. The good thing is that I summarized it for you guys on Discord. Let me just switch to MetaTrader quickly. Have a look on the live positions. I'm going to talk about it in a second. And we're going to have a read through about the summary of the economic projections. And I'm going to show you, people who are watching on YouTube, what kind of macroeconomic analysis do members get. So this is our private members Discord channel, and every single day you can see I share my MetaTrader screen. So the same screen I just shared with you, talking about my positions. If I enter into any positions, I usually share it here with quite prudently, and also sharing the macroeconomic analysis. Let's just find, oh, here you go. So this was the summary of the economic projections. The summary of the FOMC meeting minutes. So I read through the whole document and picked out most of the important stuff, which is going to be crucial to understand the health of the US economy. So basically, before the FOMC minutes were released, or was released, I said that yes, the market is currently pricing in a bigger than expected rate cut in 2024, but I was very cautious and warned everyone that hold fire, because Jay Powell said last few meetings that US Central Bank also revealed consensus that policy must remain restrictive. And actually Jay Powell said, let me just find it. Of course I can't find it when I want to read out. Powell emphasized that the FOMC was not thinking about rate cuts right now at all. Now, he's been saying this for months, 12 months. He mentioned that yes, there will be rate cuts if they see enough data and important data, which is in line according with the monetary policy. Which, you know, is quite contradicting what the market is currently pricing in, because the market went through in a very weird market sentiment change. So a few weeks ago, market was pricing in, you know, higher rates for longer, but since last week with NFP, market sentiment shifted into bigger than expected rate cuts in 2024. But the FOMC meeting minutes yesterday was quite contradicting. If you read all the summary, everything was pointing into the direction that yes, okay, we have some kind of data which showing deflationary cooling of the economy, which is bullish for gold and bearish for stocks and bearish for US dollar. But on the other hand, if you read through the document, you can see that everything is pointing into that yes, some places, some parts of the economy is cooling, but other parts are still strong. For example, the data available at the time of the meeting indicated that US real gross domestic product has expanded at a strong pace in the third quarter. This is inflationary. Economy is expecting, meaning it's overheating. Labor market conditions remain tight. This is inflationary. If people are still in the job, and currently every single unemployed person could find 1.9 jobs in the US. It sounds weird, but this is how they calculate it. So for every unemployed person, there are 2 jobs in the US. Obviously, the domestic spread or the allocation of jobs are not, not equal, because some parts of the US are poor, big cities have more jobs. With continued strong job gains and low unemployment rate, what do you think? Is this deflationary or inflationary? Of course it's inflationary. Continued job gains, low unemployment, more people still working, they get salaries, meaning that the disposable income of households continue to remain elevated. More money is lingering and floating around in the economy. Labor demand and supply were slowly moving into better alignment, while it's still not very convincing. Easing labor market imbalances were apparent in the wage data, with the 12-month changes in average hourly earnings and employment cost index each below the year earlier levels. Yes, some kind of cooling, but overall the strength of the economy, in my opinion, is still inflationary. So, what I wanted to say about this is that it's important you guys to understand what you trade. The US is the biggest economy in the whole world, and even if it's not the biggest, because some say it's China, the US controls the stock markets. Everything is, when the New York opens, you know exactly how much volume is coming into the market. So understand US first, and then move on to the macroeconomics. So this is the big picture, and if you move down into macroeconomics, you can understand how the market is going to move, or which direction it's going to move. And with yesterday's meeting minutes, actually the market is now became very cautious. Let me just show you a Financial Times article, if I can find it. In the meantime, if you have any question, feel free to ask. Can't find it. No questions?
So, sorry, Tomasz.
Go ahead.
Yesterday they mentioned in the Forbes minutes that inflation was projected to move low in coming years.
Yeah, but how low?
So that's what I wanted to ask you now. So they're trying to keep everything low because, as they said yesterday as well, PC inflation was expected to be close to 3% by the end of the year, and core PC inflation to be around 3.5.
Yeah, which is still high, almost double than the Fed target.
Okay. And also they said they are trying to make a better alignment in 2026.
2026, wow, that's quite.
Yeah, they're looking that forward.
Yeah, it's quite a long shot, isn't it?
Yeah.
That was a very good article today, and I'm wondering, where is it? No, it's not the market data. Interesting. I'm not sure if they taking it down, but yes, this is it. This is the article. So, Federal Reserve officials showed little urgency to raise interest rate further. The more you read financial articles, the better you understand the market sentiment. And this is the first point. If you don't understand the meeting minutes or any of the Fed releases, go and subscribe to some quality journalism, Financial Times and Bloomberg. So you can see that Federal Reserve officials showed little urgency to raise interest rates further, but minutes from November meeting of US Central Bank also reveal consensus that policy must remain restrictive. So I read out a few lines, a few sentences about the meeting minutes, and almost everything, 80%, was inflationary. So the summary of this is that the policy must remain restrictive. And that was completely against what the market was pricing in the last week. So the market sentiment shifted from believing that the Fed is going to, shifted from bigger than expected rate cuts in 2024 back to the original higher rates for longer, or longer for higher rates. And this is what we are against to, because market sentiment is shifting every single time we have a data, we have a news release, or anything. So to summarize what we talked about in the past 10 minutes, and now talking about gold. So we did the macroeconomics, We talked about the fundamentals in terms of the jobless claims, which is about to be released in 20 minutes. Yes. So if yesterday's FOMC meeting minutes was quite hawkish in my translation, but it's up to you guys how you're going to interpret the wordings. If the jobless claims today, and now we're moving into the macro strategy and the technical analysis. So if the jobless claims becomes higher, which is deflationary, because deflationary data is a sign of a cooling and contracting economy. So if the jobless claims becomes much higher today, meaning that initial jobless claims comes out above 231 and continuing jobless claims comes out above 1861, that shows a sign of a cooling economy. So then gold is going to create a new high. So we're going to go above the October highs. So if the data comes out and if you see the data is higher than the previous one, ignore the forecast in my opinion, because it's very close to the previous data. So marginally lower forecast than the previous one. So today we're going to focus on the previous data. So if it's higher, then gold is going to reach 2020. But if the data is lower than expected from the previous one, again we're ignoring the forecast now because it's almost virtually no difference. 5,000 is not that much. So if the data is much lower, that is a sign of a overheating economy with inflationary data. Low unemployment, more salaries, more disposable income. In that scenario, gold is going to revisit the bottom of the channel. And this is where I bring in technicals, because technicals can be very good to set stop losses, to set targets, and to find entries, good entries. What do you think, guys? Will the jobless claims be higher or lower? So are we going to see a higher jobless claims, which is bullish for gold, or lower jobless claims? Bear in mind that what we read in the FOMC meeting minutes, and let me just read it out again. So labor market conditions remain tight with continued strong job gains and low unemployment rate. From this perspective, what do you think the US jobless claims are going to be today?
So according to them, they should be lower then.
Yes, in my opinion as well, it should be lower.
And also we enter in the festive season, so probably the more jobs are created for the festive season and more people.
Then we can start front running, and I'm entering into sell position. My opinion is that the jobless claims today is going to be lower than expected because the US labor market is still strong. And again, I just did a poll and people are already asking or sharing their answers, whether it's lower or higher. Gold will sell off higher, lower. It's again, personal opinions. But my opinion, if I just focus what the Fed said and what was the analysis and the research, which was released yesterday by the FOMC meeting minutes, and also Alexei mentioned Alexei, right? Alexei.
Yes, correct, Tamar.
So we've been following the US economy. Again, holiday season, very good point. I really like it. You're bringing in that, many businesses make about 40 to 50% of their annual revenue during the Christmas season. In order to fulfill the orders and to achieve this kind of huge revenue, they need staff. And they're going to prepare not 2 weeks before Christmas, but months before Christmas, especially in the US when you can see Christmas trees and decorations even in September. So this perspective, and because of this logic, I entered into a sell position, an additional sell position to my other sell. And I pretty much explained everything, guys, so any questions? This is how you make fundamental and macroeconomic analysis. It doesn't always work because there are irregularities in every data. Sometimes you get it wrong, but the most important is you understand what you trade. You understand your enemy, which is the Fed and of course other traders in the market. You try to think, okay, so what if you build up the whole macroeconomic strategy? You look at the data, you make conclusions, logical arguments, and then you come up with a plan. I like to draw my chart and to visualize it and even to write it out, the possible scenarios. Remember that it's better to be a warrior in a garden than a gardener in a war. And this is a very good saying. And I find very useful since I started trading to visualize everything, the potential outcomes and probabilities. Because when you look at the data, the economic calendar, and at the very second when the data is released, and you look at the data, and I guarantee that 90% of people just freeze down and they forget, oh, okay, the data is higher, what should I do? But if you have a nice chart in front of you and next to it, share the screen, you have the data, you know exactly what you need to press at the second as the data comes out. Obviously, sometimes it's impossible to catch those nice moves because the data comes out and price already melting like 1,000 pips. But you have better chances if you're prepared.
Habibi.
Hello, Thomas. All is good.
Number one, how you doing?
Number one. Ready.
Simon MC, oh, welcome Simon. He's a very good guy, very smart, smarter than I am. Says that in the UK they say the first 11 months of profits over the retailer's cost high street, December 12 months, is when the clean and clear profits come in. Yeah, pretty much. Christmas is a big business. Okay, some people asking about the plan. I'll leave you for a minute. I'm gonna grab some drink. Read the narrative on the chart and let me know your comments.
Yeah, make a margarita.
Porn star martini.
You guys agree with Thomas?
Regarding the analysis, you mean?
And also, those of you who would...
Sorry.
Sorry, if anyone interested to join the Alpha community to get the same level and quality and depth of analysis, most of the people are interested in signals and analysis. Yes, I do share my MetaTrader screen. If you want to sign up, go to alphafx.eu, click on purchase and become one of the members. There's only a few membership left, so I'm sharing the link into the YouTube chat. And let's go back. Let's see how many minutes we have. Yes, Dorothy.
No, it's okay. I was just checking to see what you were doing because I was a bit late. I think you're selling, yes? You're selling gold.
So we discussed the FOMC meeting minutes, which obviously you have read last night, Dorothy, I assume, or this morning.
Yep.
The full
Yep.
looking very good. Well done. So based on the contents of the document and the staff review of the economic situation, in my opinion, the US economy is still strong. And Alexei mentioned that holiday season is coming up. We talked about the retailers and how important it is, to get the right amount of stuff to prepare businesses for the holiday, meaning that, it is in line with what the FOMC meeting minutes said. Labor market conditions remain tight with continued strong job gains and low unemployment rate. From this perspective, what the Fed said, not me, not my words, the Fed analyst words. The labor market is still strong, meaning that I think that the jobless claims will be lower than expected because for various reasons we just mentioned. So it's going to be quite inflationary data. If we see lower than expected or lower than the previous 231,000 on the initial jobless claim side and lower than 1,865,000 on the continuing jobless claim side, that is very inflationary, which means that gold should revisit the bottom of this channel. This is a reasonable target, which is 170 pips, or let's call it 200 pips. I would be happy with it. So from this perspective, I'm front running the market with a small sell. Showing you the open positions. I already logged in profit from this morning, £2,000, which is enough to enter into 2.5 lot position, have a bit of wider stop loss, but don't want to get it too wide, otherwise I would be giving back profit if it doesn't go as planned. But basically, price stuck at the October highs. It failed to break through, and now bringing in the technicals, which can give you some good entry opportunities. There are two ways. And I'm speculating, and this is my speculation, not financial advice. I'm speculating that the jobless claims will come out lower, which is inflationary, and gold should revisit the bottom of this channel. That's my plan for today, Dorothy.
Okay, thank you very much.
You're welcome.
So basically, Thomas, you're saying it will be a short term for gold to visit the bottom of the channel before it rises up, right?
Yeah, because Friday, tomorrow is bank holiday in the US, but Friday is another day. The new news came out from Middle East, or new data could come out. So I don't recommend anyone to hold positions for too long. Make the money, take the money. We are trading the data.
Ceasefire. There's a ceasefire for 4 days and a war in the Middle East.
Yeah.
Will that affect the gold prices?
Yeah, it could be. I mean, the whole pump since October 7th, when this Middle East war started, you can see that this resulted in 2,000 pip increase.
Yep.
Which is I wouldn't say it's artificial, but it's not something that it was planned. It was purely due to the safe haven asset of safe haven function of gold. Meaning that if that factor, if you factor it out, you take it out from the equation, market should immediately, normalize. So in my opinion, if they come to an agreement or we see some meaningful agreement, that pump should be normalized.
Yeah, sounds clear.
All in Sam is here. He doesn't understand why anyone would be short. Fundamentally and technically, it's screaming long. Yeah, Sam is notoriously always taking the other side of what I take. Goes against my logic, which there's nothing wrong with it. It's you just don't have to be very loud about it. Funnily, when Sam gets it wrong, he never replies. He always disappears, which I don't know. It's because of electricity problems. When he's right, he's very loud about it, which I don't think it's a very nice approach. But anyway, The most important is, doesn't matter whether you long or short, the most important is that you have a clear plan and you understand how to trade these kind of data. I hope that the chart and the logical reasoning I just navigated you through helps to better understand my thought process and my thinking. And Sam, can you put me out from my misery? He's saying, trust me, it's an easy long. Well, anything is possible. It will depend on the data, but unfortunately I can't see the data in the future. I can predict it based on my logical arguments. What could be the impact of US 100, aka Nasdaq? Well, that's a different story, guys, because Nasdaq is driven by yesterday's Nvidia story. And if you don't know what happened with Nvidia, the earnings were released yesterday, but it wasn't the earnings that was actually important. It was, let me just find it. It was the narrative or the commentary. Because Nvidia's, even though the earnings was okay, but the Nvidia suppliers leading losses after the firm warned that its revenue from China stood to fall substantially due to the US curbs on chip exports to the country. Now that's very, very bad news for tech sector. So if you ask my opinion about Nasdaq, I think that jobless claims isn't going to affect Nasdaq that much, but the fundamental story around Nvidia, or the narrative of Nvidia, will definitely affect, and that is very, very bearish for me. 2 minutes until jobless claims. Buckle up, get your credit cards ready. So I'm in a short because I'm expecting that the labor market is still too strong. So we're going to see an inflationary data today. These are my live positions. And we have 2 minutes, 15 seconds to go. I already gave you my logical reasoning, my fundamental analysis based on what I'm expecting from yesterday's FOMC meeting. And if you look at the private Discord channel I already shared, everything I analyzed, the research and my view about today's jobless claims and the US market. Also, I daily share my entry positions with the team. Let's go back to okay. One minute, 18 seconds. So my position is right around the current entry level, somewhere around that. And I placed the stop loss just above the October highs and targeting, it's a very, very modest target, 1980, 1983. But obviously it could go lower, as low as 1968 if we have a very lower jobless claims. We have 50 seconds to go. So let's see if the US is going to print a lower or higher jobless claims. Inflationary or deflationary, this is the fight of the macro data. And my argument, my logical reasoning is based on yesterday's FOMC findings. We have 30 seconds to go. Once again, this is my live position. We have 25 seconds to go.
It's kind of risky. Not gonna lie.
Yeah, but we usually front run a lot of times. I always make my plan. And we have 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. Jobless claims came out.
Hooray!
What is the number? What is the
Perfect.
number? I want to see the number. Okay, the gold is falling. Yeah, I can see that. But what is the number? All right, number came out.
209,
2.9.
209, 209.
Much lower, much lower. So it's according to my forecast
Inflation.
and my research and my analysis. This is an inflationary data, ladies and gentlemen. Hence, gold is dropping. So everything went according to the plan. Okay,
It didn't drop
let's-
much though. It didn't
No,
drop
no, no,
much.
absolutely not. So it's this is why I say don't hold positions for too long. Make the money, take the money. One final look. Jobless claims initial came out much lower than the previous one. Inflationary continuing again much lower than the previous one. So jumping back into the live position. Let's have a look. No, it wasn't a very big of a drop.
Yeah.
KCJ is asking, your stream is delayed. Yes, it's delayed because there is a 10-second delay. So this is why it's advised to join the Alpha community, so you get to see me live, real time. And by the way, people are already asking, where is Sam? Hi. Let me just change to Sam. Where are you, buddy? He's getting already penetrated by his wife.
Jesus, brother.
Sam is gone and deposit.
Sam is funding his broker's holiday for
Of course.
Christmas.
Of course.
Okay.
No more McDonald's in Christmas in Sam.
Christmas is cancelled for Sam.
Christmas cancelled, vacation cancelled, New Year's
Alright,
cancelled, everything.
well done. Okay, position is running in some nice profit. I didn't enter with some heavy 5 or 10 lots. It's only 2.5, but if everything goes well, because I was targeting 1983. If it goes down to 1987, that means it's a £2,700. So I would be very glad with that and close down as soon as possible. And Sam is back, ladies and gentlemen. Oh wow, he's saying that from where gold was dropped $2, it is an easy long. Congratulations, guys, you caught a $2 move. Gold will reverse from here. Oh, this guy. Anything is possible.
Sam, how's your account in 5 minutes?
I'm not going to joke because anything is possible. So markets, tables can turn. So
Sure.
the important is he shared his view, which didn't work out, but he's still mouthing, which anyway. Anilas Isik is saying about durable goods orders. Yes, that is deflationary. But, if you read through the FOMC meeting minutes, there is not a single mention of durable goods orders. The Fed is mostly focusing on labor market data. Durable goods orders is important if we talk about GDP, but my main focus today is on jobless claims. Market is very quiet today. How many pips? Okay, who made some money? Because position currently is running in a modest 24 pips. Sorry, 62 if you calculate what we had already entered in the morning.
I'm still in the silver.
Yeah.
I wanna close the position.
Very good.
Still holding position.
Holding till 87 to 85. Yeah.
Okay, Sam.
Yeah.
Where are you, Sam? Okay, position is running in 68 pips and 24 pips. Highly Trader made $520. That's a very good day rate, brother. I would take the money and just walk away. You know, if you cash out,
Yeah.
if
If you
if you cash out, no one can take away that money.
Nice.
if you look at the DXY, you will see that it had swept the low of London session
Mm-hmm.
exactly 1 minute or 5 minutes before the news. It's really beautiful.
5 minutes before. Yeah, I think dollar is going to strengthen based on this data.
They call it stop loss hunt.
Oh, don't like stop loss hunts. Very nice. Position running in 80 pips of profit and 35 pips of profit from the second entry.
Wagwan, Jamaica.
Number one.
Number one.
Where's Dorothy? Dorothy is very silent. Dorothy, number one.
Wagwan, Jamaica.
Yeah, man.
Hmm?
I'm busy counting my cash, man.
Oh, it's a nice one.
Hey, Dorothy, my dear. Dorothy, my dear, my one account is empty, man. You can have it.
How much you want? How much you want?
Anything,
How much you want?
anything with anything with kindness.
You can buy back the kidney now.
Dorothy, Ferrari will be fine.
Yeah, Thomas, I just want to say thank you for this advice, man. I took a $5,000 account to 35,000 in the past
What?
3 months that I've been trading with you. Yeah,
In 3 months, that's a very good.
Whoa.
in
Well
3
done.
months, literally.
Well done, Adam.
It's a
I just want to say thank you, man. I appreciate you.
That
You're
should be
welcome, brother.
posted on your website, Thomas.
yeah. It's a bit. I mean, I sense a bit of bigger risk taking than
Yeah,
normally.
yeah. I've been taking bigger lots. I'm not gonna
Yeah.
lie. I took some losses, but I made up for it. But now, I'm happy with the results and the way things are.
Yeah, very good, very good. Well done,
Appreciate it.
brother. Well done. Good to hear these wonderful results. Quickly, US 30. I'm still in the long positions, and this data, in my opinion, should be bullish for US 30. I would avoid going long on Nasdaq because of the Nvidia story, but US 30 I'm still holding the long positions. GBP/JPY, I'm trying to sell it based on the Bank of Japan narrative, but that's a different story. Now enjoy the profits from gold. And by the way, quick reminder, those of you who would like the same level of quality daily analysis and see my entries live, not delayed on YouTube, go to alphafx.eu, click on purchase and become member of the AlphaFX team. Adam is a perfect example how he flipped 5,000 to 35,000. That is absolutely insane, brother.
Don't do that again, Adam.
Is that Adam Spice?
Oh, 82 pips. Very nice. The fuck is this? Who's holding the position?
I'm still holding. I have my
I am.
TP on
Yeah.
1989.
I'm holding and adding more.
I'm out already. I'm out.
Okay, guys. I think my job is done here. So I forecasted jobless claims correctly. Now it's up to the market whether it's going to continue lower. I'm not intending to sit in front of the machine for hours. We already took profit in the morning, so I'm going to call it a day. Tomorrow is day off because the US bank holiday. Thank you so much. Enjoy the profits and see you soon. Have a good day, guys.
Thank you, Thomas. Have a good day.
Good Thomas.
Bye.
Thank you.
Bye bye. And those of you who are interested to join the Alpha community to get the same level and quality of analysis, macroeconomic perspective, I was trained as an economist at university in London and my master's degree, and I also spent quite a few time on fixed income and cash equities trading desk on the buy side, not shitty sell side broker side, on the buy side. So I did manage money for hedge funds and also two of the biggest Eastern European banks as a risk manager. If you'd like to join the Alpha community to get my daily analysis, read the link in the YouTube chat and join me. Thank you so much, guys. See you soon. This is the Alpha FX.